Welcome back to the channel and welcome to this ARWEAVE update. Now, up to this point, I haven't talked about ARWEAVE on the channel, but I'm going to be talking about ARWEAVE from now, simply because I see something across the markets that is really bullish for ARWEAVE, right? And also other cryptocurrencies, to be honest. But today, I just want to be focusing on ARWEAVE. I want to build a case as to why we could see the ARWEAVE price set move from something like $5.60, where it's sitting right now, all the way to something like $400. But before we take a deep dive into the price set, I just want to build a base here as to what we will be looking for at the price set. So in technical analysis, there is a certain theory that traders like to use, and the theory is called the Elliott wave theory right now. The Elliott wave theory just goes something like this right here. It is said that you have, normally with price action, right, you have 5 impulse waves to the upside right here, which is something like 1, 2, like what I just drew right here. Then you have a third wave here. You have a fourth wave, and then you have a fifth wave. So basically, the theory suggests that when price is moving, it moves in these impulse waves right here, right? Now, after you have had something like 5 waves to the upside, now you basically have a correction, right, in the price. Then you have something like this here, like an A, B, C correction. Now, what would have formed basically right here, you would have formed one wave. So one wave constitutes of 5 impulse waves that I've drawn right here in this color. So that's 1, 2, 3, 4, 5. You would have formed one wave right here. Now you have another wave. You would be calling wave 2. Obviously, it's a corrective wave where you have 1, 2, 3. That's A, B, C right here. So basically what I'm talking about, and the thing that you will see on a price set, you actually have 1, 2, 3, 4, 5 waves to the upside. And inside of each and every single wave, you will now be having 1, 2, 3, 4, 5 to make up the first wave, wave 1. Then you also have wave 2, in which it's actually constituting A, B, C. This is a correction, right? Then you have an impulse wave again. That's wave 3 here. And inside of wave 3, you also have sub waves, which would be like 1, 2, 3, 4, 5 right here. For a correction for wave 4, you have an A, B, C correction. Impulse wave to the upside, that's wave 5. You have 1, 2, 3, 4, 5. Then the correction on a bigger time frame would be in the form of an ABC correction here. And inside of that ABC correction, again, you have sub waves right here. That would be 1, 2, 3, 4, 5 to the downside now, and ABC to the upside, 1, 2, 3, 4, 5 to the downside. So basically, this is the structure that we'll be looking at on our prices. So basically, let's say this, what you see on top is the price set on a weekly time frame. This would be maybe the price set on a daily time frame or something like that. Then maybe this will be something like on a 4-hourly time frame. So you see the price set looking like this, right? It's a little bit much more detailed, but the same thing still goes. In each and every single wave, you'll be looking for 1, 2, 3, 4, 5 to the upside, A, B, C. Then for every correction, you'll be looking for 1, 2, 3, 4, 5 to the downside, A, B, C correction to the upside, just like that. Now going back to our price set, you can clearly see 5 waves to the upside right here. This is your wave 1, this is your wave 2, this is your wave 3, this is your wave 4, and finally you have a wave 5 here. That marks the top of the bull market, right? And then what you expect from there, obviously, as we have been mentioning, you expect an A, B, C correction, right? So this would be your A, B, and then finally your C correction. Now you might be asking yourself, am I just going to draw some random waves on a price set and call them 1, 2, 3, 4, 5 to the upside and A, B, C? There are actually rules that we use to come up with waves like this one right here. I'm going to share you like the 3 most important and the 3 unbreakable rules when it comes to, you know, the Elliott wave count theory, right? So basically, you've got 3 rules here. These ones, you cannot break any of them, right? So the first one says that wave 3 can never be the shortest of the impulse wave. As I've just been mentioning, going back to our price set, this would be our impulse wave, right? 1, 2, 3, 4, 5, the upside. Now, this wave here, the wave 3, should not be the shortest of, you know, especially wave 1 and wave 5 here, because these are our impulse waves, right, to the upside. So our third wave here should not be the shortest. Wave 1 could be longer than wave 3, or that's okay, as long as wave 3 is not shorter than wave 5. I hope I'm clear right there, right? Now, moving on to our second wave right here, wave 2 can never go beyond the start of wave 1. What this rule is trying to say is basically when we go to our price set here, if you, let me clear this, right? If you would see something like this here, right? So you are moving to the upside from a baseline here. This is your wave 1 there. If you see your wave 2 going beyond the start of wave 1 right here, this is an invalid wave count. No matter how good it looks, this is not a valid wave count. Wave 2 should never go beyond wave 1. So you could have something like this really. You can have wave 1 and wave 2 basically at the same level, but as long as wave 2 doesn't go below wave 1, this is a valid Elliott wave count. Once you see it going below, now this is not a valid Elliott wave count. So that's rule number 2. Now going back to rule number 3. Rule number 3 says that wave 4 can never cross the same price as wave 1. Now this actually is debatable, because sometimes in certain exceptions you can actually have wave 4 getting into the same region as wave 1. So what this rule was trying to say is like you have got your wave count 1, 2, 3, 4 and 5 right here, right? You see that a wave 1 here is still below wave 4. The rule is trying to say if you see your wave 4 getting into the territory of wave 1 right here, this is not a valid wave count. But as I've just mentioned, there are some situations where you can actually have this thing happening and it will still be a valid wave count, right? I'm not going to be including all that in today's video because it may just make the video super long, right? Now, before we actually start building a case as to why ARWEAVE is going to $400, we actually need to look across the crypto market to see whether this theory actually has validity, right? So the first place I'm going to take you is the Ethereum price set, right? Now, with the Ethereum price set, you can see right here since inception, from the very bottom, you have 1, 2, 3, 4, 5 waves to the upside. And like clockwork, you have an ABC correction right here, A, B, C correction. Remember from our structure, what we were looking for was 1, 2, 3, 4, 5 to the upside, A, B, C correction, right? So here, 1, 2, 3, 4, 5, A, B, C. When the correction is done, you continue to the upside in a bull market. That's 1, 2, 3, 4, 5. And then when that bull market is done, you continue again, A, B, C. This is your bear market, 1, 2, 3, 4, 5 to the next bull market. So going back to the Ethereum price set, we have already determined the first one right here, the first bull market, 1, 2, 3, 4, 5, impulse of the upside, and A, B, C correction without breaking any of those 3 rules that we mentioned, right? So you can see that wave 3 here is actually longer than wave 1. And then you can also see that wave 4 is not literally getting into the territory of wave 1. This is a perfect. In the perfect world, you would be expecting something like this. And Ethereum actually pulled it. It's amazing, right? Ethereum managed to do that. Now, let's move on to the second cycle that we want to look at right here. We are looking for 5 waves to the upside one more time. So here you have your 1, 2, 3, 4, 5 waves to the upside for the second bull market. And then you are looking for an ABC correction, right? And you actually have it right here. Look at this. You have your A, B, C correction. You mark the bottom of the bull market, and then you have to continue again, right, in another cycle. So that's your 1, 2, 3, 4, 5 to the upside one more time, right? Let's go 1, 2, 3, 4, 5. Now, this is a perfect example. Ethereum is, it's a powerhouse when it comes to cryptocurrencies, obviously. I think personally, Ethereum is no longer an altcoin, but I think it's a super coin on its own, right? So you can see the same structure that we are looking for. So we have some validity actually that, yeah, maybe it works in the crypto space, right? But maybe this is only because Ethereum is just a bigger powerhouse, right? Let's take a look at another one, slightly smaller than Ethereum, right? That will be Cardano, right? Let's see if Cardano actually respects Elliott wave counts. Right? So from the baseline here, we are looking for 5 waves upside here, and we can easily get that right. So that's your wave 1 here, wave 2, wave 3, wave 4, and wave 5. You have completed 5 impulse waves to the upside. And then what you are looking for is obviously a correction, an ABC correction. Now, for this price chart here, we would go with something like this here. This is your A wave, this is your B wave, this is your C wave right here. You have an A, B, C correction. Notice that this is your wave 1, this is your wave 2 on a bigger time frame perspective, and wave 2 is not getting below the first wave right here, and that's perfect right here. So after an ABC correction, what does Cardano do? It goes on to do another 1, 2, 3, 4, 5 to the upside again, completing another bull cycle. What about Bitcoin? Let's quickly take a look at Bitcoin right here. At the very beginning, we can see Bitcoin exhibiting the same structure right here. You have 1, 2, 3, 4, 5 moves to the upside. The first cycle is complete. And then after that, you are looking into your A, B, C correction, just like clockwork. After that, the bear market is set. You are looking for the next bull cycle, 1, 2, 3, 4, 5 to the upside. And then you go A, B, C. You mark the low of the bear market, and then you go again, 1, 2, 3, 4, 5 to the upside, giving another correction, A, B, C correction. So you can actually see that this is respected in the crypto space as well. And the theory is working nice and easy. Let's take another example, BNB. This is one of my favorites actually. 1, 2, 3, 4, 5 to the upside. A, B, C correction. 1, 2, 3, 4, 5. The second cycle. A, B, C. And we are looking for another cycle here coming from BNB. So that's amazing. Now, what about XRP? One of my favorites as well. You can see 1, 2, 3, 4, 5. Continuing to the upside right here. You complete your first cycle here. And then from there, what you are looking for is a correction to the downside. And then you have that here. A, B, C. And here the XRP price that hasn't yet completed the second cycle to the upside right here, right? Another example that we could look at is Dogecoin. Take a look at this. 1, 2, 3, 4, 5 moves to the upside. And then after that, you are looking for an ABC correction, which you got right here. This is your first wave, A, B, and then your C leg, marking the bottom of the bear market. And then you continue to the upside again in a 1, 2, 3, 4, 5 to the upside here. Here you could say this is your leg 1 height here, leg 2, leg 3, leg 4, and then the fifth wave right here, completing another cycle here on the Dogecoin price set. So basically, this structure is working. So looking at those examples that we have looked at across the market, I think it's safe to say that we can apply the Elliott wave theory to this ARWEAVE token of ours, right? So let's go ahead and see what we'll be expecting next right here. You'll be expecting a push to the upside, second wave, third wave, fourth wave, going and breaking all-time high, going as far as, at least at this moment right now, the biggest price target that I've seen is something like $400 per ARWEAVE now. That's massive really, because you're coming off of something like, this was something like $4, going all the way to something like 400 is 100x. It's amazing, right? So this is the reason why I've been building a portfolio right here with ARWEAVE at these specific zones right here. So I'm still buying at the moment. The more the price gets lower, I think I'm enticed to buy, right? But let's quickly go back to building our case here on the ARWEAVE price set. I'm going to show you a certain structure that appears almost every time across the market, right? Especially the crypto market. And I can tell you with a high degree of certainty, this is one of the most bullish structures that I've seen in the crypto space. And more often than not, it produces results, right? So the structure that I'm talking about is this same structure that we see here on the ARWEAVE price set. Pay attention to something like this here. You see this whole structure here. This is an amazing bottoming structure. And usually after this, prices goes the minimum that I've seen in the market, something like a 10x. So from where we are right now, that's something like $60-something per ARWEAVE token, right? So this could actually be a price target, right? But we're going to be deep diving further into this structure to see what exactly happens at what stage. So the structure that I'm talking about is a Wyckoff accumulation pattern. I'm just going to briefly explain the Wyckoff accumulation pattern, show you examples across the market, and then we can actually start applying it on the ARWEAVE price set. So this is how the Wyckoff accumulation pattern looks like. Basically, the price has been crashing for a long time. You find a preliminary support right here, and then you try to move to the upside. Obviously, you get slammed massively on the price set here, and usually bad news happen right here with the selling climax. Obviously, the price starts to go to the upside to mark what is called an automatic rally, and this is usually where you mark the top of your trading range. So you can see the two lines of resistance here, and then at the bottom with your selling climax and your secondary test here, you are forming a support, some kind of what that, right? So the prices can actually try this resistance time and again, as many times as it can, and also testing the bottom right here in what is called a secondary test, right? So you can do that multiple times, obviously, going up and down, up and down, up and down, until you reach a certain extent where you will be forming a creek right now. Price moving slowly but surely to the downside until you have another capitulation to the downside here, forming your spring. Now, this spring, at times, it actually goes below the trading range right here. So it breaks support and then eventually it starts moving to the upside right here. Now, this is the last resistance that you find, or the last movement to the downside you find on a Wyckoff accumulation pattern. And after that, it's going to be rainbows and right, the better days are going to come right here. So this is where exactly we are sitting with the ARWEAVE price. I don't know if you're actually paying attention, but I'm going to show you how the ARWEAVE price looks like compared to the Wyckoff accumulation pattern that we have right here. So you can see you're selling climax right happening right here with a preliminary support, obviously. Then you have your selling climax, and then you have, an automatic rally here, secondary test, right? You try the top of the range one more time, you get rejected, you have a secondary test right here. This is a little bit stretched, obviously. I could have made it smaller, but I think it's still understandable this way, right? And then you head finally into your creek right here. Price is just slowly but surely moving to the downside until you finally reach a point where there's just capitulation. You go like, oh, the market is tired, right? A lot of sellers appear right here, but it's actually the big players that will be buying this low that you set right here. So you continue to the upside, and then, you know, this is what we'll be looking for the ARWEAVE price to do. So we'll be looking for something like this here. Let me quickly go and look for a highlighter here. So we're looking at something like this here. Sorry, let me try one more time. So you'll be looking at something like this here, continued price to the upside right here, right? Until you reach the price target of this Wyckoff accumulation pattern right here. So let's quickly jump into the market and try to see if we actually have examples of something like that happening right here, right? Now, this is the Cardano price set exhibiting that Wyckoff accumulation pattern that we were talking about right here. So what you notice, if you have your preliminary support right here, you have your selling climax, you have an automatic rally to the top of the range, right? And then you have a secondary test, and phase B, you try again to hit the top of your range, and then eventually you get hit by spring, right? A violent spring here. But take a look at this here. After this, you see price starting to move to the upside slowly but surely, and eventually working out this area for a massive bull run, right? So let's go ahead and copy this fractal here on the Cardano price set. We're going to copy and try to place it right on top of the ARWEAVE price set to try and see if we have any confluence right there. So now that we have copied the Cardano price set fractal, you can actually see that there are striking similarities right here. Look at the way you just move to the downside right here. You try to test it one more time. You creak here. Eventually, you head into a spring moment. Something happening here on the ARWEAVE price set, and eventually you start moving to the upside. But is there another example that we can actually find in the market to suggest that this thing is actually valid? Let me give you an example of Tron. Again, back then in 2018, exhibiting the same thing basically. You notice that you have got a preliminary support right here. You're selling climax, automatic rally, another secondary test right here in phase B. You go ahead to try and test the top of the range, and finally you get rejected into your spring moment right there. And then after the spring moment, you can see how the price continue to the upside. So if we copy this fractal one more time and put it on our ARWEAVE chart, so once you copy the Tron fractal, you can actually see that this is coming up in line with the ARWEAVE price set, and the only thing that is remaining for the ARWEAVE price set here is to continue slowly but surely to the upside. So as I had already mentioned, this is why I'm taking this opportunity to be loading my bags right here, right? Another example that we could actually take a look at is the Ethereum price set. I won't be copying fractals anymore, but basically you see the same thing: preliminary support, selling climax, automatic rally, secondary test, and phase B before you crash into your spring, and then after that you continue to the upside. Another example that I could give is the BNB price set. You see you have the same thing here. You have your preliminary support right here, your selling climax, your automatic rally, your secondary test here before you finally head into your spring moment. And this is where I'm saying the ARWEAVE price set is sitting, continuing to the upside eventually, right? Another example across the market is something like XRP. You see you have basically the same structure, although this one may be looking complicated. It's still the same structures if you look closely, right? Another example, which is also a little bit complicated, but basically the same thing, is the Dogecoin price set. You can still see what happened later, right? Let's see if we have another example here. We've got Quant as well, basically the same structure here before you eventually head into a spring moment, continuing to the upside. So this is the same thing that is actually happening here with our ARWEAVE price set. So now that we have established that, number one, the bottom is in for the ARWEAVE price set. Number two, the structure that we have on the price set is a bullish structure. Number three, according to the Elliott wave theory, which you've seen across the market, we are expecting a leg to the upside here on the ARWEAVE price set. The big question obviously is, what are the price targets that we could be looking at, right? Now, we're going to still be using this same structure that I've just been showing you, this Wyckoff accumulation pattern here, to just go ahead and try to draw some price set, right? So we're going to start here on the Cardano price set. What you notice with the Cardano price set is, if you go ahead and use your Fibonacci retracement tool right here from the very top to the very bottom right here of the structure that we have, you notice that Cardano managed to reach something like the 2.618 Fibonacci retracement. That was something like a 160x. All right. What about a coin like BNB, right? After a structure like this one, from the very top here to the very bottom here, we can see that the BNB price set reached an interesting price target, actually extended over the 4.236 Fibonacci retracement level. So it reached that price again. You can see that it had a pullback right here before eventually it cleared it and continued to the upside, right? Let's quickly take a look at Dogecoin. After having a structure like the same one that we have on the ARWEAVE price set, from the very top to the very beginning, you also notice that it almost did the same thing that the BNB price set did, right? So you continue even extending beyond the 4.236 fib retracement level, and then you have a pullback then continuing for another leg to the upside right here. Fingers crossed we have something like this here for the ARWEAVE price set, right? Now, another example that I could actually give is the quant price set, as we have already established that they have the same setup here. So from the very top to the very bottom here, you can see something like another 4.236 fib retracement level here, and then you have a pullback to continue another leg to the upside. This is an amazing price tag, in my own opinion. But if we would take a look at something like Tron here, with the same setup really, from the very top here to the very bottom, you can see something like here. The Tron price set only managed something like 0.618. Basically, we could say 0.5 fib retracement level there, right? Another example that I could actually give of something like this here would be the XRP price set with the same setup really. What you notice is from the very top to the very bottom here, you can see that the XRP price set only managed something like a 0.5 fib retracement level, right? Same thing that the Tron price set did. Now, if we would look at Ethereum, which had the same structure here, we could go ahead and measure from the very top to the very bottom right here and see where the structure took us. Again, it's a 2.618. So we actually have common fib retracement levels right here. If you remember, we took a look at Tron 0.5 retracement level, XRP 0.5 retracement level, Cardano 2.618. Then we looked at Ethereum again, which is the one we are looking at right now, 2.618. We looked at Quant, that actually exceeded the 4.236. And we had the same thing here for the Dogecoin price chart as well. BNB had the same thing. It actually exceeded the 4.236 fib retracement level. Now going back to our ARWEAVE price chart, if we would go ahead and apply the same thing here, pulling our fib retracement 2 from the very top to the very bottom, you can actually see that we have those common suspects that we had at the 0.5 fib retracement level. Now that would take the ARWEAVE price to something like $50. And if we would continue to go ahead and do what Ethereum and Cardano did, that was 2.618 fib retracement level, that would take the ARWEAVE price to something like $244. And then if we would go ahead and extend to the 4.236 that Dogecoin, BNB, and Quant did, that would actually take the price of ARWEAVE to something like $400 per coin, right? So yeah, this is how I came up to this conclusion. Now, I want you to tell me what you think. But obviously, none of what I say is financial advice, and you should not buy or sell anything because of anything I say, all right? And if you could, please subscribe to the channel, and then I'll see you on the next one. Take care. Bye.